Kevin, I noticed a few stocks that you're invested in the Gabelli funds are sin stocks. You've got Mondelez covering gluttony, you've got Beam covering alcohol. Is this just your way to have a little bit of a defensive play?
Well, at Gabelli, what we do is we look for great companies in great industries. And I would say that the consumer sector is generally a great place to look for long-term investment ideas. And in addition to that, we look for some sort of catalyst or an event that can surface the value for a stock. Often that can be a takeover of a company, but what we've seen of a lot of recently is what we call financial engineering. Spin-offs, split-offs, et cetera. So Beam in particular, the ticker's BEAM, they are, as you pointed out, in the distilled spirits market. It's about a $300 billion market globally, growing mid to high single digits. But they used to be part of a conglomerate called Fortune Brands. They had a golf division and a home and security division, and they ended up selling off golf and spinning off the home and security business. So,
now that stock, for one, I'm glad you mentioned it. It's been weak over the last 3 months. What is driving that?
No, I think it's been a couple things. One is that it's done very well since the spin, reflecting the fact that it's a very good business. And also, importantly for us, it's a potential takeover candidate. So we think one of the two largest industry players, Diageo and Pernod, they'll want to buy Beam eventually. So every time you see in the press that they might be interested in buying somebody else in the short term, it might send the Beam stock back a couple bucks.
Let's touch on Mondelez. Now, this is a stock that a lot of people like, but the valuation on a price to earnings ratio is pretty high. So why do you like it?
Well, you know, it's really not that high. Really, Mondelez, again, financial engineering, it was Kraft. They spun off Kraft Foods, which is their North American retail business. And now Mondelez is their global snacks business. Things like cookies, chocolates, candy, gum. They've got great brands, Oreo, Cadbury, Trident. So really, we see Mondelez as a surrogate for the emerging middle class around the world. So they've got great distribution in places like India, Latin America, China. They've got the brands people want. We think they're going to do about $1.55 or so of earnings next year. The stock's about 27, and looking out 3 to 5 years, we think that it could be a $50 stock.
Is there any concerns you have with Mondelez? I mean, is there any commodity, currency, headwinds, anything? I mean, I can't find anything negative on this stock.
Well, they're a little of both in the short term. Both input costs, you know, we do expect to be up and will be volatile. But the great thing about Mondelez as well as Beam is they both have great brands, and that translates into pricing power. So to the extent that input costs do go up, they can then pass that on and still protect their profit margins.
All right, well, thank you for your stock ideas today.
Thank you.